All right, welcome to this explainer. We're diving straight into the exciting, fast-paced, and, let's be real, often brutal reality of crypto trading for beginners. If you've stared at crypto charts for more than 5 minutes, you know it feels a lot like the Wild West out there. But surviving this market, it's really not about luck. It's about learning the landscape. So today we're going to walk through the 7 most common mistakes that new traders make, and way more importantly, how you can actually avoid them.
So let's kick things off with a pretty tough question. Why do most crypto beginners fail? Well, the hard truth here is that most beginners bleed money simply because they keep repeating completely preventable mistakes. It's not because they lack some ultra-complex financial degree. Honestly, it boils down to habits. The habits you build early on are literally going to dictate whether your results steadily improve or just totally crash over time. Today, we're going to fix that. To get there, we'll be covering 5 key areas today: the beginner's trap, preparation and risk, navigating market chaos, psychology and reflection, and finally, your trading action plan.
Part 1. The beginner's trap. This is essentially the life cycle of a bad trade. Moving right into Part 2, preparation and risk. Let's look at the setup traps.
All right, this brings us to mistake number 1, trading without a plan. Look at the difference here. The gambler just jumps right in, no clear entry point and absolutely zero stop loss. The trader, on the other hand, operates with a clearly defined entry, a hard stop loss, and a specific profit target. You absolutely must know these 3 things before you risk a single cent. Seriously, if you don't have this plan locked down, you aren't actually trading, you're just gambling.
That leads us to mistake number 2, which is risking way too much on a single trade. You have got to fiercely protect your capital. Notice what responsible risk looks like. You've got this massive 95% block of protected capital compared to a tiny, little 5% risk on a single trade. You can literally never allow one single trade to have an outsized, account-wiping impact on your total capital. Guard that account balance with your life.
Okay, Part 3. Navigating market chaos. These are the market traps.
And here is mistake number 3, one that literally almost everyone has felt: FOMO, or the fear of missing out. It's this tragic habit of blindly chasing the market. You know the feeling. You see a massive green candle, the price is just rocketing upward, and you panic buy because you're terrified you're missing the rocket ship to the moon. Please avoid buying just because the market is moving fast. You've got to patiently wait for your planned setups. Let the trade come to you.
Mistake number 4 is ignoring the trend. Crypto markets have these massive, powerful trends, and trading with them provides way better probabilities for success than fighting them. Think about it. Trying to fight the overall market direction or trying to perfectly catch the exact bottom or top against the current, that is a super fast track to losing your capital. Don't fight the current.
Moving on to mistake number 5, relying solely on indicators. Now, we all love a chart packed with fascinating data points, right? But you can't treat them like a magic 8-ball. You really need to use indicators as confirmation tools, not as standalone trading systems. They are there to support the analysis you've already done, not to make the final decision for you.
Just to really hammer this home, indicators only confirm the narrative. Actually, scratch that, they help confirm the narrative. There is absolutely no magic indicator out there that's going to give you a 100% win rate. Use them wisely to validate what the market's price action and the overarching trend are already screaming at you. Because at the end of the day, the trend dictates your ultimate survival.
That brings us to Part 4, psychology and reflection. Let's talk about the mind traps.
Mistake number 6 is letting your emotions steer the wheel. You can honestly have the absolute best plan in the world, but fear and greed, they will completely destroy good strategies. Greed makes you hold on to a winning trade way too long until it flips into a loser. And fear makes you panic sell at the absolute bottom. You've got to follow your rules consistently and kick your emotions out of the driver's seat.
Which leads us perfectly into mistake number 7, not keeping a trading journal. Look, if you aren't tracking your trades, how on earth do you know what you're doing right or wrong? You really need to track and review them regularly. It is literally the only objective way to identify your own destructive behavioral patterns, like those sneaky ones driven by fear and greed, and actually improve your strategy over time.
Finally, Part 5, your trading action plan. Consider this the antidote. All right, to consistently survive and hopefully thrive in the crypto market, you need to execute this specific action plan based on everything we've just covered. You must create a plan before every single trade. You've got to strictly manage your risk to protect that capital. Always follow the overarching trend. Use your indicators purely as confirmation, not magic. Keep those inner emotions in check and rigorously maintain a journal to track your progress. Consider this your ultimate survival checklist.
So let's put this into practice right now. I've got a bit of a homework challenge for you. Step 1. Go back and review 3 recent trades you've made, or even paper trades if you're just starting out. Step 2. Take a hard, honest look and identify which of these 7 mistakes actively affected your outcome. Did you jump in without a plan? Did you let FOMO completely take over? Try to pinpoint the exact error.
As you step back out into the chaotic, super fast-moving world of crypto, you've got a choice to make. Are you going to follow your new action plan, strictly define your risk, and wait for the perfect setup? Or are you going to fall right back into the beginner's trap and let your next trade be just another entirely preventable mistake? What's it going to be?